Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the gold market as usual in the second weekly report. So as you mentioned last week, the gold market showed so fast action, so that intraday charts and daily chart are not very representative for us. So we can't find something there because we see just forward straight action and no patterns. All that we could say on the daily is just market overbought and to identify some fib levels that maybe could be useful for us on the coming week. That's why today we're also taking in consideration the weekly chart, because here we have at least some targets that could become important next week. At least we will know the important levels and where potentially market could start the pullback. So the pullback is really a good start because market is falling to the same driving factors for the second week in a row, and as tensions around United States, China tariffs, with the Iran confrontation and possible Fed dovish policy and rate cuts already mostly priced in. So market definitely needs some relief. Besides, it's going up with no rest. Take a look, it's almost through the months. So we have 1, 2, 3, 4, 5 candles in a row, 5 weeks in a row with no significant retracement. Market is deeply overbought here. This week we have very important signs, very important moments, as market is broken through major 30% fib resistance on the monthly chart, and it has exceeded the yearly pivot resistance one. Although it stands relatively close to these levels, so we can't talk on the final breakout, absolute breakout yet, but if price will be able to hold above it, we could say that just confirms that we indeed have the new long-term bull trend on the gold market. So speaking on the perspective of the next week, take a look that here we have two close standing targets. First one is the butterfly extension, it's 1420. This market stands very close to. Next one will be OP, while with the same A, B, C bottom pattern. COP has been hit. It was 1380 approximately, if you remember we taken in consideration last week. It has been broken. OP stands 1450, but the tricky moment stands that OP stands very significant in overbought area. So market already stands overextended to the overbought, but OP stands even higher. Besides, this OP target coincides with the major monthly OP that stands at the same 1450 area. And currently it's still not quite clear whether the market have the sufficient power to reach the 1450, or it still will need to take the rest first and then continue to this OP target. So we'll see it on the next week. Currently, the week will start with the 1420 area. So that's the point that we will keep an eye on, because potentially this is also the level where the market could start the retracement. We will not talk about the depth of the retracement yet, because we do not see any patterns that could trigger this retracement or something that could let us to calculate the targets. On the weekly, we have actually just two levels, the 1356 that coincides with the overbought, and 1320 is the confluence. 1315, 1321 is a confluence support on the weekly chart. So maybe, but potentially these two levels we could take into consideration as potential destination point. But this is only if retracement will start from this area. So that being said, the first stage of our trading plan is to watch market response on 1420 area. So despite how strong and attractive rally stands on the market, we're need to follow the odds, and odds tells that current situation is not good for taking any long position, because market stands overextended, and in the current circumstances odds stands not in our favor. So because it significantly increased the chances on the pullback. And what's more important, that current position of the market is really fragile, because it is very unstable in such conditions, and when deeply overbought, and the retracement could start at any moment. So that just increases the possible risk if you're trying to step in and jump in the running train. So it will be, could be a really very expensive journey. So that's why, despite that market shows really very good rally, we are watching for a pullback. We need to get the comfortable level for taking the position. Besides, as a rule, when you steps in here, for example, or miss entry somewhere in this area, you usually have the chance to take the position at the same level that you have missed, but at the more comfortable conditions on the retracement. So that's why I do not see any reasons to really get hurry and trying to take the long position as soon as possible on the gold market. From that standpoint, the retracement and how it will start, it mostly theoretical questions for us, because that is not the things that really worry us, because we need the result of the retracement, but not retracement itself, because our trading plan doesn't suggest the trading the gold market on the short side. We need the result, we need the destination point, and potential bullish patterns that we could use for taking the position. So that is our major point of our trading plan. So as I said, first is the 1420 area and what response it will show here. Let's go further. On a daily, we do not have something really new. ABCD pattern here is local ABCD. OP target has been hit, but as you can see, no patterns again. So just straight upward action. We can't consider it as the thrust for the bread and butter or double repo because it was interrupted here. Here actually, guys, was the bread and butter that we have mentioned previously. That is not sufficient for us to the upside. So no Dinopoly patterns we have here, no other patterns as well. Two levels again, 1376, 1356 is the same weekly level, but here on the daily it's also the confidence support. Now, how general retracement could start if it will start at all, of course. If you take a look at the 4-hour time frame chart, it suggests upward continuation. The grabber has been formed here, and this grabber suggests the taking out of the stock. So it means that at least another upside swing should be formed and could be formed in the gold market. On the hourly chart, we have the huge bullish hidden divergence with the MACD indicator. This divergence also suggests the taking out of this top, and it could be treated as the bullish dynamic pressure. Taking it all together, we could suggest the appearing of the butterfly, because it will simultaneously taking out of this top, and take a look at its extension, stands at 1490, and coincides with the weekly big butterfly target. So that's why this is another reason why we will take a look at the 1420 area. Conversely, as I said, as market really stands fragile, the opposite scenario is just market could start retracement right at this point. So you could see, for example, the collapse on Monday morning and starting downward action. So that's also could happen. But for us, actually, it's no big difference, because we need, as I said, a retracement itself. We not really consider the possible taking the short position, and we're not really very interesting whether it will start right from this point or market will hit 1420 first. This is mostly theoretical chance just to try to identify the point where retracement is starting. So that's our view on the gold market. As the chances on retracement are increasing gradually, so we need to consider first the 1420 area. What will happen here? Because potentially it could become the level where retracement will start. If no retracement will start, we start to watch for 1450, because this is major monthly and weekly target. And there will be more significant chance on this pullback. But pullback probably stands not too far, because as I said, the major driving factors already mostly priced in and worked out. So investors will need something else. If nothing will appear, the reasonable pullback relief on market should start. That's our strategy on the gold on the nearest week.